Markets now. Joining us from Melbourne, Stan Sharmu. Stan, good to see you there. Just firstly, I guess, looking at the leads that we have, it was interesting to watch the European and US markets' reactions overnight, particularly to that surprise Bank of Japan further quantitative easing announcement.
Yeah, absolutely. We did see markets fairly well bid through the afternoon part of the Asian session. Of course, in the morning we had a pretty flat start, and it did seem like we'll be stuck in that consolidation phase for a little while, but that surprise move by the BOJ really drove risk sentiment higher. Unfortunately, European and US markets didn't quite manage to mirror as big a rally as we saw in the Asian session. We saw the momentum just wane a little bit there, and it just seems like market participants were looking for a bit more fresh leads on the economic front to really drive markets higher, but particularly in Europe it was fairly quiet. The only real development we got was a Greek finance ministry official saying they've agreed on about 9.5 billion euro worth of cuts out of the 11.5 billion euro which they need. So absolutely they've come a little bit closer to where they need to be at the moment with Troika. So we'll need to continue to monitor the wires for that. But unfortunately the euro and the Aussie didn't remain quite as strong against the greenback. Obviously those US existing home sales data came in better than expected, and they helped cap some of the gains in the risk crosses. So that was quite disappointing on that front. The euro just barely managed to make 1.38, whilst the Aussie was struggling after it hit about 1.05. So it certainly seems like the momentum's waned over there. And with the Aussie Kiwi cross today will be quite interesting with Q2 GDP data due out with about a 0.4% growth expected. Anything slightly ahead of this could see that the pair come under pressure today. So there's quite a bit to look out for. We also have quite a lot of PMI numbers across the boards, which could probably get some attention, particularly from China later on today.
Yeah, absolutely. I guess just looking, it was interesting just reading through John from Thomson Reuters notes about the overnight session, saying that there were a lot of outcomes that were really difficult to explain, you know, particularly with regards to the Spanish situation. You know, you see those Spanish 10-year bond yields pulling back, yet at the same time other moves that would suggest risk on weren't happening.
Yeah, absolutely. It didn't quite happen that way. Of course, we're now testing relatively uncharted waters now. We've had a pretty big run over the past few weeks. It does seem like central banks are happy to act, so we could probably see markets well supported off their lows. And that could be a theme going forward, where we keep seeing markets any dips in the markets bought up, because investors really feel like central banks are ready to act, and they will act no matter what.
What do you think then, looking at our market today, is it going to be a pretty steady start? What's your opening call?
Yeah, we've got the market down about 0.2% at the moment, so that's to about 4,410. So that's not too concerning, really, considering the fact that we obviously broke through that 4,400 level yesterday and managed to close above it. So we'll probably see the market bought on the early dips. Of course, we will be watching the resource names. We saw iron ore spike up to 109.50, but apart from that, most of the resource sector was actually, most of the commodities were actually struggling, particularly oil, which had a sharp drop as we saw inventories rise overnight. So it does seem like the energy sector might come under pressure, but iron ore miners might be able to get some positive momentum from the better iron ore price there. Obviously, it's been struggling for a while, but now it's really seen a sharp recovery over a few sessions, so that will definitely be in focus. We'll also have stocks like James Hardie and Boral, which have some exposure to the US housing market, come into focus as well, because of obviously those existing home sales data from overnight. James Hardie has actually been one of the better performing stocks in the market all year, so that will probably deserve some attention from investors today. We've obviously still got McMahon Holdings being one of the interesting ones to watch after that big drop yesterday. David Jones as well, after their earnings yesterday, they'll probably get some broker re-ratings today, so we'll be eyeing those guys out.
Absolutely, lots to watch, isn't there, Stan? Thanks as always.
Cheers.
Well, that Bank of Japan has given markets in